everyone, welcome to Finanzen For Us. My name is Ben here. I hope you guys are doing well. In case if you are watching me again first time, please watch my previous video, go to the channel. You'll get to know something investing opportunities in Germany with the basics as well as and some guidelines or some videos on cryptocurrencies as well. So let's if you haven't watched my part one like investing in Germany, please watch the part one so that you will get to know the part one and part two. So in this part two we will be discussing the different opportunities about investing in Germany, which are those like exchange traded funds, mutual funds, like we call it here as a funds and some stocks and other forms of investment. So let's get started. And if you haven't subscribed to the channel yet, please subscribe to the channel. There are a lot of things coming up so that it could help you, benefit you, like a guideline where you can start about like investing in Germany and so on and so forth. So stay tuned for this channel and let's get started. Come to the next part, type 3, exchange traded fund, ETF. This is really commonly a practice form of investment in Germany. And what is this fund? This is the fund where you have a multiple bunch of securities like a company. Let's take the same example like MSCI World. What they did, they thought about like, okay, they create a fund which has stocks inside of from the 1600 companies which are across 23 developed countries. So this 1600 companies, they will create a fund, and out of that fund, they will the investment amount which they will receive from the investors will be distributed in the 1600 companies, different 1600 different companies. So this fund will be created and that will be listed on the stock market. So that is the exchange traded funds, and which has a multiple underlying assets. So what could be the underlying assets here? So the stocks of the 1600 companies, and how it could be, it is traded on exchange. So that's how it is called the exchange traded funds as well. And the pool of money will be collected from like say for small amount as in Germany, the as you can start the investments with a minimum 25 euros. For example, in the same example of MSCI World, they accept the investment amount of minimum 25 euros with the respective brokers. So again, it could be a passive, it could be active. What do I mean with this actively or passively managed? Actively is, suppose in this same example of MSCI World, they think we will invest only top 1600 companies. So top 1600 companies. So anything as per their benchmark or as per their calculations, whatever comes, like suppose there are say example like Tesla is falls under 1600 today, and after a month it's suppose it will rank 1610 or maybe 1601 and as per that benchmark. So they will exclude the Tesla and they will buy the shares of the 1600 company. So and so that's how it is actively managed. So the 1600 top companies will be actively managed, and what in this case passively managed. So irrespective of their performance, like they will choose the 1600 companies, and irrespective of their performance they will keep this 1600, they will distribute this investors amount in this 1600 company. So even if it is their performance is low as per their benchmark or high, they will stick to the 1600 companies. So that is the example of passively managed. So it could be both actively and passively. So again, this form of fund is really less expensive compared to the other form of investments. So it is benefited, like there are some brokers which we'll get to know in the next coming videos. There are really zero commission fees even if you invest your 25 euros per month of savings plan. So and this is mostly suitable for this long-term investors and so on and so forth. So I hope this point is clear, and if you still have any issues or like questions, please write a comment. So let's get to the next form of investment. The forms of investments, it is a mutual funds, like we call it in mutual funds in India, but here it is called as a funds. So it is a similar like where you have a fund manager who will be allocating the funds with the sector wise as well as like sector wise as well as you have like company wise, they will allocate certain amount of funds in equity, certain amount of funds in the debt market again, which is like bond market, and so, or like commodity, or like they also keep some cash reserves with themselves. So this is also in Germany, which is known as a funds. Second point is bonds. Bonds is basically uh, are issued by government as well as issued by the company. So this is the form of investments where government uh, as well as companies will expect certain amount from the market, and the investors, they pull money from the investors, and what it is, like you're lending, you're like investing, but ultimately you're lending some part of money with the for to the government as well as to the companies. So in return, what you get interest, which could be a fixed interest rate for, may say for 3 years, through 3% for a year, or 5%, depends a lot of things. You will get interest monthly basis, quarterly basis, 6 monthly basis, or yearly basis. So this kind of returns, and at the end of the maturity, which is like matured, like say for example you bought a bond who has a maturity of like 1 years, or like it 5 years, it could be 10 years as well. So and that after that on that expiry date, you will get your money back as well. So this form of investments is actually uh, a bigger form of investments, where the required money, or it's like little more, and like you can't invest with 25 euros. It is the bonds are like most of like for the high net worth individuals. So again, it could be safe as well as it could be riskier form of investment. Safe when it will be when some bonds are issued by the government, and riskier it could be when the bond is issued by the company. So again, there are a lot of different things as well. If you have any questions, please write. So the next is like shares and stocks. So shares are like, as we know, shares is a form of investments where company comes to the market and they try to raise the capital, and this capital is being contributed by people like you and me who are called as investors, and you will get some part of like you get the part of ownership. Like suppose if you buying the shares of Apple, if you buy a stock of Apple, that means like you are buying a portion of your ownership for that amount. And what you will get in return, you will get return some dividends based on the company's terms and conditions. If they perform well, if they're making profits, you will get some dividends from your stocks, as well as the money what you invested that will get appreciated over the time of period. It could appreciate, it could be depreciated. So if it is good company and like bigger company, chances are like the risk is little less to the risk is little less compared to the company which are like new companies, or like the penny stocks or something like that. So again, cryptocurrencies, yeah, really versatile, really volatile, I would mean, uh, where you buy some coins like bitcoins, like from Cardano, like for example Ripple. You buy some amount, part of your money, some part of cryptocurrencies, which could be your investing your money into the future blockchain services which they provide. So this is really volatile and really risky form of investment. And if you are starting with and if you are new to this subject for investing, please do not try to invest money, all of your money into cryptocurrencies. I would recommend invest only that money which you don't need it for future. Or like for example, like say example for if you say you have some 50 euros in a month, and which you feel like, okay, if that is okay, even if I lose this 50 euros, it doesn't matter. So in that part of time, instead of wasting that 50 euros, you can invest in cryptocurrencies, because this is really risky, and you have to think that you will be like, it's more risky form of investment. So again, you have the next form of investment is real estate. You can buy property, again you can rent a property, buy property and you can rent it out. You can generate some income from it, or as well as if it is buying a property, and you can save some amount of your rent. And uh, for your information, the real estate, or like the rate of interest when you buy a home, is around, the bank charges only around 1% to 2%. So yeah, so the home loans are really really affordable, which is like 1% to 2% per annum. And if you don't want to invest in real estates, totally fine. There are some funds which is called REITs. These are the companies who actually pull money from the people like you and me, investors, and they make a bunch of fund, and that will be invested in commercial properties. So ultimately, you are not buying a commercial or like a residential property, but you are having the portion of that property. So yeah, so I hope, guys, and yeah, that's all. Thanks for your patience. And again, if you have any questions, please write me in a comment box. Thank you.